Good afternoon and welcome everybody. We are at day 4 of the Risk Academy week, in the afternoon session. Today we're discussing cyber and ICT risk and the security ecosystem. I'm very happy to introduce our panelists for the day. If we could move on to the speaker slide, please. Great. So we have Laios Antal. He's a partner with the cyber risk team in Deloitte Central Europe. Andrei Ionescu, a partner in risk advisory with Deloitte Central Europe, based out of Bucharest. Daniel Hellman, he's a director with risk advisory with Deloitte Germany. And Alexander Huciska, he's the risk advisory leader of Deloitte Austria. Yes. So what we're going to do today, we're going to try to give an overview of the environment. Yes. So how cyber and ICT risk and the security framework come together. Yes. So this is the effort for the day. A little bit of housekeeping. If we could move the slide, please. So we do have a special section so you can ask questions. We're going to try to address as many as the panel can accommodate within the hour. And because of the large number of attendants, we have everybody muted. The questions that we don't have time to address in the panel, we're going to make sure that one of the panelists is going to reach out to you to address any questions. Yes? Thank you. If we can move to the next slide, please. So, Laios, this is where I invite you. So my background is more on the supervisory agenda. Yes, so I don't know exactly the detail and the technicality, but I know it's very high up on the priority of the banking supervisor right now. Yes. So, what can you tell us? How can you help us understand?
Very complex and turbulent times. Good afternoon, everybody, or good morning, depending on where you are in the world, or good evening. Experience of an experience. I have 24 years in cybersecurity, so I have seen many things. Let me share with you what my thoughts. So this is how Laios sees the world. I'm starting with the silence is never a good sign. And it was about 1.5 years ago, 2 years ago, when I often said on conferences that there is too big silence. And silence is never good. If you are a diver, you are under the sea, you're swimming, and there are no fish around you, it's a bad sign. There must be a shark near. The same is cybersecurity. That was this moderate time, and last year we have seen a heavy increase, and in the past months, past couple of months, a hard hit in many angles, primarily in the ransomware attacks and the business email compromises. And let me tell you, the sophisticated attacks require a lot of investment. So they require 0 days, either purchased or pre-developed, access to information, to data leaks, deployment tools. These require development frameworks. Deployment tools require a lot of effort to make happen. Frameworks are primarily for lateral movement, also a lot of effort, preparation for the hit, lots of tool developments further on, the ransomware code development and follow-up support, what I will talk about later, and the money laundering. As you can see, it's a lot of tasks to commit to develop and perform an attack. And such thing requires a lot of money. So these are typically OCGs that are doing it, organized crime groups. Cost of cyber insurance increased in the past few months. You have seen in the news that the premiums got 70% higher quarter to quarter in Q1 2021. And there's a constant increase since 2019. Also, for the cyber insurance, the first signs of changes are visible, halting some of the reimbursement, changing the insurance policies are following up. It is because in many of the ransomwares, the companies paid to the attackers and they covered it by the insurance. Is this an ideal situation? No, definitely not. I'm sure all of you have heard the Colonial Pipeline case, where the hackers managed to get down the East Coast pipeline in the US. And again, Colonial paid 4.4 million USD ransom. And one of the first cases when actually the authorities managed to seize 2.2 million of these in cryptocurrencies. So there are some extra measures taken. But the fact that we learned from the dark side attack is that it has become already a service a while ago. So ransomware attacks do not happen only because for the sake of making someone down or getting some ransom, getting some money. It can be initiated in a way that someone contracts for performing an attack against a company. So there is a complete service and support behind such an attack. Our experience shows that the initial attacks of the either the ransom or VCs are typically harmless, seemingly harmless steps. So a lightish email is landing someone's inbox, someone remotely clicking on something that he or she shouldn't do so, and downloads a content that will do the first steps to break into. That's why we see that organized crime groups now is intensively hiring penetration testers, and the criteria how they are starting, what can you do if I grant you access to a single computer? How can you leverage that access to make a complete network down? And this is actually what happens when they are performing the attack. Business email compromise was sharply in the rise in 2020. There was a single week when I had to respond to 4 cases parallel. Because many of the organized crime groups realized that this is an easy way to get money and consider this as low risk. We are seeing now the first big responses, and you have seen that Interpol had a major activity ending last week, where they managed to seize a significant amount of money, $83 million. And that was one of the biggest exercise in the past months to capture individuals with respect to a BEC extended attack. And there were various other types of attacks: phishings, smishing, account hijackings, data leaks. Important to understand all these. I personally received 2 weeks ago an email claiming that one of my close relatives died in New York, and I am to get $10 million to inheritance from the wealth of the individual. I just have to give the guy all my personal data. I received SMS recently that I have a parcel coming and I can track it. Of course, it was a malware attack again against mobile phones. I got a message through WhatsApp just to have to pass over a 6-digit number to someone who was asking that I sent it to you accidentally, please pass it over to me. This is an account hijacking attack. And such things happen. So it's not just businesses are taken down, they are going against individuals, company leaders who they believe have access to information which are crucial for them. So the attacks are extensive and far more sophisticated than we have seen in the past, and definitely are in the hand of the organized crime groups. And for the scale of fin crime that I said, the $83 million, you can see here, and I will mention later my thoughts about it, that they were freezing 1,600 bank accounts. It means that they managed to open 1,600 bank accounts legitimately, and were using it purely for money laundering purposes. So after a moderate time, from a cyber threat point of view, it's pretty turbulent. We can switch to the next slide, please. It's important to understand the concept that was changing, because a long time ago, if they wanted to make a bank down, they were attacking the bank. Now it's changing. If I want to attack, I put here as an example, if I want to stop a bakery operating, I don't need to attack the bakery. It's enough if I stop them using getting any yeast or water or whatever. So supply chain is becoming important because these attackers realize that the vendors a company is using may have limited resources to make proper cybersecurity. So they are weak. And if they attack them, the company that relies on the services or goods they provide will be out of operation. And that's a big change. And this is what I see in uprising now. And we should distinguish general vendors who are providing general services to you or making goods for you to your production or anything, and the software vendors, because they are extremely heavily attacking software vendors to modify a patch you are downloading to your software or embed to hard code into a software a piece of code that shouldn't be there, and the unexpected extras I call. Can we really trust in the software vendors? It's becoming a big question mark. And for the compliance, expectations often set as per standards, and the expectation can be met on papers and the solutions too. Whereas the attackers are testing a company for the real security. They are not interested in what ISO certificate someone has or what compliance paper someone has. They are going for real. And the reality is somewhere way too far from what we have seen on papers and reports. Can we pass on to the next slide, please? So what I see as big issues these days is one is the procurement policies. I often see that procurement policies may go against the effective cybersecurity. Sorry to say that. The cheapest win principle are not helping too much to have good security. And I try to see, even especially when there is a downturn time, I've seen it after 2008, I see it now, that there are many companies who are going for the cheapest vendor because they want to save money. But there are areas where it's difficult to save money, and security is one of those. Maybe the cheapest is not the best. And when you publish your procurement policy, the attackers know the procurement policy too. They know where to go. And they also check out for the insurance policies. They know how much is covered by the insurance. The two can add to a very bad situation. Quite often I see that security professionals are hired without doing proper proof of concept work where they can show the capability of the team. Quite often I see that the proof of concept is not assessed properly enough. What I like is when someone is hiring security professionals in a way that actual team who will do the permanent work for the client, the company, will be assessed, and that team will perform the real work further on, because that will show the reality after all. Certified professionals, we are certified whatever, can be called ISO or anything. I would say that there are lots of similarities to the restaurants. If you go into a Michelin star restaurant, it's also good to know that the chef who was there when they got the Michelin star is still there, because it's primarily the chef that will make the food for you and his team or her team, and that will matter. Certified professionals are important, and not certified teams or certified companies. That's very important to understand. So bear in mind that these days the attackers have high intelligence. They know a lot about the company who they try to attack or attempt to attack, and they know inside out not only the technical parameters, but they know a lot of extras about the business. In the future, what I see, not only the preparation, the technical preparation for such an attacks are going to be important by means of proper testing, penetration testing. We will talk further on about Tiber, what that means to you, and the incident response capability. The good monitoring services and the threat intelligence are going to be increasingly important in the future. And when I'm talking about threat intelligence, I do mean that one entity may contract with 2, 3, 4, 5 separate intelligence sources to know as much information as possible. Just to give you a reflection, recently I worked for a client and they were interested in how much information is out there about them on the net. We quickly managed to find, just one example, the password, username, password, the PA of the CEO, which was all there for sale. And for sale, I mean of $50. So just to understand the things that it's important to understand what there is for sale on the darknet, what bad guys are talking on forums about further attacks, tool developments, etc., information exchange, data leaks, etc. Threat intelligence is going to be highly important. Preparation for such an attack is going to be important, and incident response capabilities are going to be highly important in the future. That's what has changed in the past couple of months. Attackers are on a completely different league than they were 5 years ago. That's very shortly what I wanted to share with you about my harsh reality and my life. Hope I managed to help you in some respect. If there are any questions further on, just let me know. I'm more than happy to answer. Dim, it's back to you.
Thanks, Lajos. It's very interesting. So just to start making this more specific a bit to the financial services industry, yes, and I would like Andrei to comment a little bit to help us understand. So European supervisors are adopting Tiber EU, yes, and this seems to be changing a lot the cyber risk management area of things, yes. So Andrei, can you help us understand what Tiber EU is, how it is being adopted across Europe, and what does that mean for the industry?
Yes, thank you. Hello, everybody. Yeah, it's true what Lajos presented. Exactly the way approaching a recommendation he made is in a way what ECB was thinking, and before that it was let's say a topic for everybody, how to respond against these sophisticated attacks. Cyber EU, or like it's coming from threat intelligence based ethical red team. It is a framework developed by ECB to improve resilience against sophisticated cyber attacks. What that means is that they were thinking to how to have procurement guidelines against around these services, how to define exactly the scope of work and how to have the approach, what to do and how to do, what are the certifications of those professionals that needs to execute such exercises, and here is the key, because it's a long list of requirements, by having that list commonly approached to Europe or to all the financial market infrastructures in Europe, you have kind of a common approach to how to respond. If you talked about countries, of course, it started in Netherlands, and then it was starting in UK. CBEST is called there. In Netherlands, it's called Tiber NL. So from Netherlands, Tiber EU is going to be like localized, or let's say implemented locally in many countries. Now is Belgium, Denmark, Finland, Germany, Romania, Ireland, Spain. So not to, I mean, there are more and more to come. It's Italy, Norway. So they already implemented and they already have a framework.
And on the other hand, yes, what is this being the impact on the sector? Yes, so I understand this is a framework that the EU supervisors, the EU regulators are adopting. Yes, and first there's going to be, I understand, a period of implementation. Yeah, in this respect.
It started already. Discussions are starting back in 2017. 2019 they started to do it, and then in 2020 they issued again some updated frameworks. Then of course now, for example, there is already a procurement started for the central banks in Europe. There are already 10 central banks going under this framework agreement to run this exercise on their own infrastructure. What that means? It means that it is an exercise that usually lasts between 3 months and 6 months. So it's quite large, can go even further. But let's say in average can go between 3 and 6 months. So as the name says, that is, or let's say I mentioned earlier, that is sophisticated, it's trying to replicate a real attack. So this is the key. It's doing a preparation phase, the threat intelligence part, is preparing the exercise, is going precisely and defining the scope. It is, you can imagine everything is on production systems, and this is key. So that's why I said. So it's really important for the organizations to be prepared for that and to spend time on this, and of course money. And then what is happening after that is that is the remediation part, which is very important, because the exercise is not finishing only with the report, with the findings. It's not a simple pen test.
And this is something that's mandatory across the EU countries?
The ECB recommended it. It's not something that at the moment is having penalties or it's imposing penalties. Of course, the penalties are coming if you fail to protect yourself. So ECB is not going like this. But the recommendation is to happen 2-3 years, every 2-3 years, so periodical. As I said, the central banks are giving an example because they started with their own infrastructure. So it's more like, as I see it now, is lead by example, providing support, providing guidelines. Is not saying you have this penalty, you need to do it. Actually, I think it would be wrong. If you start doing it like that, everybody will start ticking the box. I did it. So then it's more like for the own interest of the banks or the companies, is not for complying with something.
And where has this is there an EU country that has fully implemented Tiber, and do we have any lessons learned even from early stages?
Yes, it was implemented, as I said, for before Tiber EU came, it was Tiber Netherlands, so it was executed there. It was we did it also in Romania. And the lesson learned are clearly communication is key. Communication with the team of the, let's say, of the bank, the team that is executing, having a clear plan and following that plan. This is not something to improvise. Is once you define the plan of the attack, you do not start improvising. As I said, being on the production. So then these are key elements. And I would say not to forget, and it was also the last example of Lajos, is that it's not everything about the infrastructure and about the machines. It's about people many times. So it's also related to an attack like that is also challenging the people, not only the main resource, not only the infrastructure.
And then a final question for me to understand a little bit. The context of the findings, yes. So you said the exercise takes something between 3 and 6 months, yes. Mm-hmm. And then there is a phase of remediation, yeah. How substantial is usually this remediation, or to the extent that we have observed? So what is the requirement on the side of the bank? How many resources they need to allocate? What are the critical areas that they need to work on? So from experience, or statistically speaking, so far, what have you seen? How large is this remediation phase?
The remediation phase may go even to change the let's say the framework the bank or the company is using in order to protect. So it goes even that far, and that means changing the framework is also changing sometimes even the internal control framework. But the internal control framework is supported by the infrastructure, by the machine, by everything. So then it can go even to there, to rethink the way you approach it. Other times is only fixing and having some patches or correcting something. So it's not necessarily, it doesn't have to be so extensive, but many times it goes there, because because it challenges you from many angles. The findings can be really to the core. So then it's not only like updating something, changing a password, and changing a parameter into a password. So it's more than that. That's why I'm saying that it's extensive. Sometimes it needs a plan of 1 or 2 years to start making and putting as a roadmap to do it. So it is significant, and it has an impact on the organization, or it may have an impact.
And my last question. Inside the pandemic, there was the pandemic itself was a big catalyst, yes, on digitalizing the banking business model, yes. So that was a process that we expected to see in the course of many years, but it did happen in the course of 2 years. So there was a fast track. And as far as I know, the concern of the regulator is that the risk management framework did not evolve in the same way, yes, not as fast as it changed in the business model. Do you see any signs coming from the supervisor or from the banking sector that this is now a higher priority on their agenda? Is there a fast track to adapt Tiber or to implement a tighter control framework?
It is. I mean, with the Tiber, as I said, there is a lot of activity around it and a lot of activity in approaching and every country adopting it. So this is one. The others are the regarding the ICT risk management guidelines published by EBA. Also, those are starting, and these needs to be integrated in the risk management framework of the banks in the general. So it's not something isolated. It is specific, but it needs to be integrated there and aligned. So all these things started. And yes, there is a lot of activity, and I think the pressure on the organizations will be even more to align all these frameworks, because there are many coming, many applying, many overlapping. We talk about the NIS directive, for example. That's also a requirement. You also need to do an audit there, or so all these will overlap, and then at one point Tiber was seen as you do a large exercise, you do a complex exercise that serves to different purposes. You don't have to tick so many boxes, so every time you do an audit. Otherwise, really, like organization will look only for doing audits or reviews. So there is a pressure on that, but there is also a way to align them. So I think that will happen. So there are signs that people are thinking to have one approach for many other things, so it serves the purpose for several requirements. So because there are many requirements indeed.
Okay, thanks Andrei, thanks a lot. So speaking of alignment, Alexander, we have the European initiative on ICT risk requirements, yes. So we have the famous DORA, and I do understand it's the first significant effort, yes, for us to have a common framework. I would say in the benefit of integrated European supervision, yes. But can you tell us a little bit about DORA and what is your expectation of how this will be affecting the sector?
Mm-hmm. Yes, of course. So also welcome and a good afternoon from my side. Whatever was said at the moment or at the beginning by Lajos and by Andrei, it's totally true, and it's the situation at the moment. The thing what they will change at the moment, and I will go a little bit then into details, is that they have recognized that there is a lot of different regulation out there. Yeah. So we see in the last 3, 4, 5, 6 years a lot of new regulation. Yeah, we discussed today Tiber, as Andrei discussed. We will discuss a little bit about payment security. We will discuss about ICT things. And the European Union have also recognized this, yeah. And they said, okay, this might be a lot of, and Andrei said this also, overlapping at the moment, yeah. So you have regulation which are overlapping with the other regulation for 80%, but not for 100%, and it's difficult to manage this, yeah. And even if you go to a bank, institute, or company, or an insurance company, there are also differences in there. Yeah, there are minor differences in there. And the DORA now, this overall Digital Operational Resilience Act from the European Union, is actually the idea to streamline everything, to align everything to one big framework, which is then mandatory for a lot of all the financial industry. Yeah. So they will get rid of this overlapping things. This was honestly the triggering event for setting up this DORA, this paper. The paper was issued in a draft version in September last year, and now they are working on this paper. And there is some rumors behind that they are working on that. We expect for that, and I jump then into also the content, we expect that they will issue second half of this year, end of this year, a new version, a compromise version, which they put all the things together. They will issue the DORA framework then early in 2022. This is what we now at this point expect. And then there will be a period of 12 months to implement this DORA. Yeah. Will DORA be in the, if you go to the content, then there will be not only new things there. Yeah. So a lot of what they will try to explain in a little bit more detail is already out there, yeah, in ICD, EBA guidelines, in outsourcing guidelines, things like that, yeah. But what they want to do is to bring together. There are finally, if we talk about, we talk about there are 4 main targets with this DORA, yeah. One of the thing is what actually this brings us back to what Laos told us before. It is bringing all this critical third-party provider. They would like to focus on that. They would like to bring this also, apart from all the risk in there, they will bring this also within the perimeter of the supervisory authorities. Yeah. So all this critical third-party provider will be also subject to a supervisor. This is what the main focus is, and this includes, of course, all cloud service providers. Yeah. And this will bring us that the existing outsourcing guidelines will be included in this DORA guideline in total, or at least maybe referenced. This is not clear yet. But there will be, of course, a critical analytics before necessary. Also, there will be necessary critical analytics to define these critical third-party providers, and then to bring them on the same level as your company or your institute is. This is one of the main issues. The second main issue is what they have realized is if you have, there will a lot of guidelines regarding incident management, but the alignment will be done in the incident reporting. At the moment, if you have an incident, then you have to, in generally, or at least what I see with our clients, they have to report this incident to several authorities, to several parties, and maybe with some minor differences. Yeah, the difference is what is a significant incident, how is this defined? This is different from one regulation to the other, from one authority to the other. The target is to align all this, that we have then finally only one reporting. So this should be, if it comes at that way, as they said, this should be a little bit more easy in the future, yeah? So that you have only to set up one reporting to authorities. The third point or main point, what they want to change is, and then we come back to Andre, what you have said. At the moment, Tiber is pretty much based on recommendation to implement it, but this will become mandatory at the moment. So I do not know whether they will reference directly to Tiber at the moment, but it is very clear that they make that they will implement mandatorily threat-based penetration testing for some institutes. The institute who will be in there will be defined. Yeah, this is of course the bigger ones, and this will not only be a one-time shot. So they will ask this to do this on a regular basis, and they will define this, how big this should be. Yeah. This is what we also expect in this DORA regulation. And the last point, the fourth point, is they will discuss again a lot about ICT governance, but there I do not expect so much changes to the moment we have now in EBA guidelines in ICT. Yeah? So this is pretty much what we expect here. We will see. We will, of course, observe what's coming out then there in the second half of this year. But at the moment, this can change. But at the moment, they said they will bring this. They will issue the final version early next year.
Yeah, I remember when, and this is a question to both Alex and Peter. Yeah, so respectively, you're covering like in this field, like the areas of Austria and Germany, and I know that you're advising clients across Europe. Yes, and in this respect. So my impression when the supervisor started issuing guidelines for ICT, like the EBA guidelines and the continuous updates, especially throughout the pandemic, yes, in terms of security, the banks had a hard time adapting. So I think there were elements where we thought that the banks would be more prepared to address, yes. So now, considering that there is a super package in creation, yes, Cyber ICT guidelines, potentially other things like the chapters that you mentioned that are going to fall into a common package, and we all know that when ECB recommends, it means that very soon after it's going to become mandatory. Yes. So what is the maturity of the sector to absorb and implement? Yes, not just to comply on paper, but to practically make this like a security framework for the institution.
Maybe I start here with a remark. I hope this connection works. So when I started consulting, do security consulting for banks, it was very often, I would say, compliance driven or security by policies and processes, which I think is a very important part. And what we hear today in the whole course, and if you see a pattern, that the regulators are going closer to the technology and also to the real machinery room, let's say it like that. And the regulators have realized that compliance is a very important framework, but it's not always the thing that really makes things more secure. And it's not so adaptive, for example, to new upcoming threats. And that's what we tackle here with operational security, where we say the regulators are very educated in the meantime, that they also can go down to the network level, to the operational security stuff. And that is, from a security standpoint, a perfect new view. Certainly, it puts a lot of pressure on the FSI industry as such to also report in that aspect. And I hope that what Alexander said with the DORA framework, that there is some relief, at least with regards to the reporting and to the agreement, what we mean by making something secure. So there is an observation that we see from the German regulator, and I'm sure there is more to come.
Yeah, maybe in addition to that, so for companies who already tried to fulfill all the recommendation and are very aligned with ICT framework now and the outsourcing framework. Honestly, at this point of time, yeah, so at this point, I do not expect so much new things. Maybe more details, more explanation how the regulator expected. The big issue will be for the critical third-party provider, because they will become subject to the supervisory directly. And the big thing is that all this, we expect a reference to the DIBA framework will be mandatory.
Okay. And do you see an issue across jurisdictions that you have contact with clients? Is the maturity level different between the banks, or do you think it's uniform across Europe at this point? Just an impression, yes.
Yeah. My impression, it's a little bit. Actually, it's not from country to country the difference. It's often the size of the company, of the institute. We see, because the pressure was much earlier on the significant institutes, and they are prepared better, in my respect, as far as I see this with my clients, than some smaller institutes.
Okay. Very often our discussion with the supervisor and often with the sector, yes, we facilitate this conversation sometimes between the banking sector and the supervisor as consultants, yes, as to how viable is a small-sized bank, yes, because we are discussing a series of investments that need to be made to be up to par, yes, whether it's because of compliance purposes or because it's updating your risk management framework, yes. So how do you see any threat to the smaller banks in terms of viability? Are they going to be able to absorb this size and this complexity of security regulation?
Difficult question, but honestly, if they raise the bar with regulation, then it's for smaller institutes, for smaller banks, for smaller insurance companies, it's of course more difficult to comply with that, or it's much more in relation to income, much more cost intensive. Yeah. So we see that, of course, this will be a discussion, this will be an issue. So that very small banks maybe is an issue that they will not be able to comply with all the regulations they have. And then it depends on how good they manage all this outsourcing, third-party, critical third-party provider. But finally, and this is clear, at least from the regulators I know, is that you never can give up the obligation to fulfill all the requirements. Yeah? This will rely in the institute and in the bank, so also in the small banks. And they have to monitor at least the third-party provider. And this will cost resources and energy. And smaller institutes will have more difficulties to comply with that. Yeah, I see this. Yeah.
Yeah, maybe a little bit of a different twist to that. I see that small banks are usually very often part of a framework or of a sector, and it will be to really have an efficient way. It will be key that they play together. So you mentioned the service providers that they are doing some sort of a heartbeat job for in the center to increase security. What will not work is to say, I'm small, I don't have to comply, because the small pieces are as important in the whole sector as the big pieces. It needs to be an agreement across the sector that everybody plays in the same game. So I think it will be a challenge for the sector in total to maintain efficiency within these programs. And I think one observation, regulators have realized that and try to play to combine things.
Okay. Thank you. Very useful. Now, the last chapter of our discussion, I'm trying to see it from the point of view of the banking sector. Yes, we talked about digitalization. We talked about the effects of security concerns or an update of the security risk management framework of the bank. But the area that transformed perhaps the most in the last 2-3 years is the payments area. Yes, so it transformed both from the banks and from I don't say competitive, but rather complementary sectors. Yes, so Daniel, can you help us understand a little bit the transformation of this particular aspect of the banking operations, and how do we see this being sustained throughout Europe?
Yeah, I think you bring up a very good point. What we see in the payment industries, that we have a lot of new market entrants. We see fintechs that come up with new business models, with new services like account information or payment initiation services, and they are fintechs started from a very unregulated area, which then became part of became visible to the regulators. And what we've seen here is, I mean, I think it's seen by everybody that we have the PSD2 came into force during the last years, and in 2018 we had the delegated regulation 2018-389, which actually then defined all the security measures for access to accounts with strong customer authentication and the use of secure communication instead of screen scraping, for example. So we have seen that the regulator addressed the additional risks and actually implemented measures. First, we created a level playing field for all the actors, and then also implemented measures to increase security in order to mitigate cyber risks at this stage. And I think what we see here is that it came into force and it was implemented by all the fintechs and the banks and so on. And what we've seen in delegated regulation 2018-389 was that the regulator also started to put a control on it, because they said you have to do a regular audit on the implementation of the strong customer authentication and the secure communication. So they want to have security in these topics, just to know that it is all in place and that the customers or the consumers can rely on the security in the payment industries. And what we've seen here in Germany as well is that now that the regulator, for example, made the audit of these security measures or the appropriateness of the security measures a topic of the statutory audit. So we can clearly see that it is in the eye of the regulator, payment security. And also when we talk about not about the retail sector, but more about the interbank sector, we can also see a similar topic, which was also discussed earlier. When we look, for example, at the SWIFT customer security program, which came into force or was presented in 2016, and over the years it was implemented by all the banks and corporates. It was on a self-assessment level, so the corporates and banks had to comply with the controls of the customer security program, but had to kind of comply on the self-assessment level. But now SWIFT said from 2021 onwards, we would like to have an independent assessment of the compliance with these controls, just to make sure that we protect the market infrastructure, the networks, but also all the correspondence in the system from cyber attacks. So it's also become a little bit more control on that you have to show that you are compliant with all the risk mitigation measures. And there's also pressure from some regulators, because they actively ask for these assessments from the third parties, or from in the past from the internal departments that did this assessment, just to make sure that also market infrastructures, payment systems are adequately secured. So it's been a hot topic for the regulator. And when we also look in the future, we see a view that PSD2 will be revised by this year. And the main topics we see here is, and they point a lot into this cybersecurity direction, that we look at what are future states of strong customer authentication with a view on biometrics, for example. They look at new cyber risks that come from new payment methods like instant payments. What does it mean for the banks in the payment industry? And they also look at, and this was said many times in this discussion already, that we always have third-party suppliers in the chain which are not regulated today. And what SWIFT on the one hand tries to do is put a spotlight on them, those who are not yet regulated today, but also PSD2 is looking at technical service providers, because they could become a starting point for a cyber attack. So I think this is a very important topic.
A lot of the fintechs were found at fault. Yes, in the last 2 years there has been like a barrage of recommendations, and even the ECB raised a lot of the capital and liquidity requirements for them identifying this higher risk. So, do you think, in your opinion, is there a drive in fintech adopting a different degree of maturity when it comes to payment security?
Could you repeat, please?
Is there on the supervisory pressure that you mentioned? Yes, so there is a lot of demand on the fintech industry. Yes, other than the regulation issue, do you see the same trends coming from the supervisor? Do you see like strong guidance from the supervisor for the fintech industry to invest more in the security framework?
Well, what we see is that they put them under supervision because they regulated some of them. That's the first step. And then what we see, at least for Germany, we can see that usually they said you should behave similar to a bank, which they said, okay, nice recommendation, but now from 2021 onwards, they have issued an own framework for payment institutions, which focuses on regulatory requirements regarding IT. So yes, they do.
Okay, thank you. And then a final question. We received a lot of questions, but the final question that I want to ask, I want to combine two, yes, so we cover two to the entire panel. And then I would like to get the perspective of a larger market and a smaller market, yes, like a larger bank and a smaller bank. So the first part is that even though we talk a lot about credit risk and non-performing loans, the first issue on ECB's agenda is operational risk, yes, non-financial risk. And then after a period of perhaps being more quiet, yes, now the supervisor is going to follow again a series of on-site inspections and off-site inspections on the matter, yes. Do you think, is the sector ready? Are the large banks or the small banks ready in this respect to receive this type of supervisory scrutiny? Peter, if you want to comment from a larger market perspective. Or Alex or Laios?
Maybe for my question, but I come from a smaller market here. But is the sector ready for all the ideas that the regulator has? The question would be no. Actually, this will be a task. Yeah. So honestly, a lot of things now, what they are saying is like, okay, if they make really Cyber as mandatory, and Cyber was also the recommendation, it is not enough at this stage and to make a small pen test or make a pen test once a year. So the necessity to have this red-led pen testing is here. And this comes from the business. What now they are trying is to put into a guideline, and then they will test whether the guideline is adhered to, yes or no. It will always be an effort to comply with the ideas from the regulators. This is what I see. Yeah. So.
Yeah, maybe I can add now as things work again. There is no question if the market is ready. To be very honest, it is not about regulation or not. It is about how do we want to secure our industry. And the reality is that we get more, and I'm repeating things that we are talking about the last 20 years, we get more professional attackers, more professional adversaries, but also the ability to make mistakes. And with this extremely integrated, what we talk today, extremely integrated industry, and not only locally in Liechtenstein, Austria, Hungary, and wherever, it is integrated, and no player, even in these countries, standing alone. And therefore, I think it's a wake-up call that we get once a year. We have to do it. Again, there is, from a risk management perspective, even in cyber, you have to weigh in what is possible and what not. And I think, and I hope actually to see from the German perspective, that BaFin is going to, through a little bit of a redesign, a rethinking, effort. And I invite everybody to go into the dialogue instead of saying we don't like regulation. It's the question, how do we make smart regulation that really helps the purpose? Now, that is, I think, a call for everybody right before the hour. I think everybody is willing. I have rarely seen somebody, regardless which industry in the sector, who says, I don't want to. The question is, how can you weigh the balance of costs and efforts, and also the impact, the positive impact to the risk in this discussion.
And because you mentioned about the cost effectiveness and the feasibility of the regulation, yes, we usually, sometimes, I think too often, yes, both the sector and us as consultants, sometimes we approach the regulation more of a compliance perspective, yes, strategic sometimes, investment sometimes, but can this type of security framework or advance in the security agenda become a business differentiator for the early adopters? There were at some point, for example, banks using their capital adequacy to advertise how safe they are. Yes. Do you see a future in the bank claiming how secure it is for the clients? Is this a business advantage?
I may come up with an example from the car industry. When Daimler made the first car, they started with security, with handbrakes. And we have seen the last 20 years an extreme integration of security gadgets in cars. You can't buy a car without an airbag anymore, and with all these features. And you know what? Everybody expects it to be there. And it will not be a differentiator if you have it, but it will certainly be a negative differentiator if you mess it up.
Thank you. Thanks a lot. We still receive some questions. We have 1 minute to close. I don't think we have enough time to cover more questions, but we will distribute the material that was presented, and we will make sure that one of the panelists reaches out to address such questions. Yes. So on this point, I would like to thank the speakers. I would like to thank the attendants as well. Please.
Have we responded to the question that we see here? There is an experience that from a risk manager in the audience, embedding the most challenging part, but its most important part, that you want to effectively change against cyber threats. Yeah, I would fully agree that the framework is a framework, but you need to make it fit for your organization, and it's certainly not one size fits all. Risk managers know that best. That's about managing risk means to accept, but also to make decisions in regards. And then there will be no black and white. It will always be a lot of shades of and colorful rather than gray.
Thanks, Peter. Thanks, everybody. Thanks for the attendance. I wish everybody a nice afternoon, and I do hope the next time around we can have a physical forum. Thank you.
Thank you.
Thank you.
Bye-bye.